morning, good afternoon, everyone. My name is Russ, and I would like to welcome you all on our Friday update here on DataDash. For those who missed our previous recording, I would cover as a new member of the DataDash team together with Nicholas the markets every Friday and share my setups and active trades that I actually take. So, in my opinion, this week, despite it's the day off in the markets, is actually also quite important in the macro world, and I'll try to cover it shortly, but reminding you guys to keep building your long-term conviction. So, in today's video, I'm gonna cover some of my absolutely favorite setups. Of course, we're gonna cover more crypto this time too. As some of you requested, I'll show you how we can make asymmetrical, absolutely exponential gains. And of course, we'll have to cover a little bit of macro too, so you can have your long-term conviction. And with all that said, guys, let's go. A lot of macroeconomical data came out this week. And if you remember my previous stream, I was telling that there is a huge potentiality for the Goldilocks scenario, or at least an expectation of that for the next 6 months. For those who doesn't remember, the Goldilocks scenario is that economical scenario where macro is warm enough with steady economical growth to prevent the recession. However, the growth is not so hot as to push it into the inflationary state. So that's just on par. And here we see a very strong GDP growth that despite all comes with under forecasted unemployment claims, and quarterly GDP and monthly GDP both beat their expectation. What is very important here to keep in mind is there is also a yearly inflation expectation that is going lower, and 5-year inflation expectation also went lower in the months of March. And it is so important in my opinion because this 5-year number is probably secretly the most important number that Fed waits for the entire months. So when you hear their key phrase, inflation expectations are well anchored, they are looking at that number. And as long as this number is not jumping higher, they are absolutely in no rush to push that hike. This is the key number, which is more important than housing prices, wages, non-farm payroll, and so on. And that 5-year number yesterday just washed away a lot of forehead short-term sweat for Fed officials, and that actually buys them more time to hope and pray that the next CPI print will be lower in the upcoming months. And that brings me to the previous Friday when I mentioned that I actually don't care if we're gonna have 2 hikes or 3 hikes or 1 hike this year. The fact that the Waller yesterday and other Fed officials are still using the word cut in their sentences, that means this bull is doing fine. So cut is quite bullish and hike is bearish, right? So until we start to speak about hikes, and I don't think that would happen because that would put the entire macro at a very detrimental risk of collapse, we are doing fine. So for the next 3 to 6 months, guys, as I said, keep your long-term conviction and don't get shaken out of your long trades. Let's start with crypto market, guys. And if you remember on the previous stream on Friday, I outlined 3 scenarios of what I would be looking for at a Bitcoin chart. And let's see what happened. Scenario B for me would be actually to bring the higher low here, swipe that week, and retest again our 62.9. And this is actually quite to a tick what has exactly happened since our stream. So we came to the yellow line. No magic, guys. We just grabbed the liquidity from the previous candle with a high volume. So further on, you can see that that was actually a good trade. From there onwards, we tapped into the 69.2 zone, and that was a good trade. That was, in my opinion, a very good trade, which I took around 11%. So right now. We are significantly higher. So let's see what, in my opinion, will play out right now. So what I would be looking at on Bitcoin chart is that new mini range that we've been forming, the range high and the range low. So here in the middle of the range, I'm absolutely in no rush to take any position at all whatsoever. Neither on alts, and we will see why looking at funding and Bitcoin dominance. What I would be waiting for personally is either an acceptance above the range so that we can go and take that liquidity here from all the shorts. I've been feeling a little bit complacent on the way from the all-time high, or I will wait for acceptance below the low, but be careful guys, because I would still look for that area as a potential bounce area. Why? Because here we have the order block that was preceding the last red candle, preceding our market structure break. So I would consider that the area around 67,000, especially on the low volume on the Easter prolonged weekend, can be the area where long can be still a high risk reward trade. So don't blindly short from 69 into nowhere. We're still bullish. I am still bullish personally. And the market structure is also bullish. We're going to have a couple of educational videos soon, as I promised, regarding how to read the market structure. But for now, just hold with me. So those are two scenarios I'm looking for BTC. Speaking of Bitcoin dominance, we are still, in my opinion, either on a weekly or on a daily, doesn't matter, in a very particularly bullish structure, since we have broken out. Once again, I don't trend the meme lines, but a lot of people look at those when it especially comes to the derivative indices like the dominance, for example. So since we have broken out from this 50% range, we've been consolidating here in ascending range, ascending triangle, whatever you call it. So honestly, I would be very careful here, rushing into any of alts, because consolidation below the 54% resistance, it doesn't look like it's an amazing macroeconomically moment to go all in into the altcoins, especially if you're building a long-term spot portfolio. I would be looking for flashes. And the reason why I would be actually looking for flashes is actually funding. So it is quite okay during the bull market uptrends to be around where Bitcoin is right now, is this 0.025%. But on the other hand side, guys, if you look like on a yearly, in order to keep some of those positions on alts, you're actually having close to 3 digits interest rates per year. So yeah, I would not say that this is very, very sustainable in the long run. In my opinion, that funding around 0.03005 area is actually subject to flush sooner or later, because the market would not allow leverage to get ahead of the spot bids. Once again, funding per se itself doesn't matter anything. You can't just purely trade funding. But trust me, I know the markets. I've been daily on the markets for multiple years. So we should expect a violent flash, and I think it would come in the area around 70,000. We don't have that much price action around the 17,000 area, so it is a little bit too little to determine where the violent crash could appear. But in my opinion, the funding have to be resetted, and it's an amazing opportunity to do it on the longer weekend, on the low volume weekend, like the Easter weekend. So please be careful in leverage. I think it's a way better place for spot right now. For those who has been with us last Friday, remember we took the trade on AVE on the retest of the previous highs. Let's see how this trade is doing for now. I think if you are in the trade, I would stay here. We are roughly around, I would say, 7% to 10% up, depending where you took the trade. So I am still having the positive outlook, especially looking at the BTC pair. As I mentioned, I think we are finding the bottoming formation here, building the bottoming formation. So I would still keep my spot exposure to Aave. Let's have a look if we have anything else interesting in the market for now. Pretty same structure as Aave. I would actually not be shy away from adding a little bit to the spot exposure on fill. I think especially if we can break against the psychological level of 10. We are accepting in a previous range, and that's another 90 to 100% from here. Wherever you're gonna catch the bid, I would create multiple letter orders between 8.9 until 9.3. And as I said, guys, that's the weekend where I would not touch the leverage. Spot exposure is absolutely fine, especially when you're exposed to the double-digit gains in percentage. On the Bitcoin pair, I would say Filecoin also doesn't look that bad. As you can see, we're actually starting to shift the market structure towards the upside, printing high highs here and provisionally starting to create the higher low. So I would actually be okay to have some spot exposure here, as I mentioned. And you remember, guys, last week I promised you that week in crypto would not be the most volatile. So I gave you a couple of great setups on Cannabis. We'll look into them in a second, but congrats to those who took them. Amazing progress so far. There is one setup that I'm extremely bullish about, and the only reason I could not share it last week is simply due to the time. I have so much to share, but we'd like to keep the videos in a way towards 20 minutes. So let's have a look on one of my favorite setups so far. Is for you, I'd like to showcase additionally how on a weekly time frame the MACD have been curling up, pointing us towards the bottoming formation. Same with RSI. RSI is printing multiple divergences here. OBV, the blue line you see, is finally breaking out. Can increase the volume a little bit. The lower line in the bottom is a relative strength index to S&P 500. So you can actually see that PayPal has not done much yet. It has been significantly underperforming all possible indices whatsoever since September 21. What is really I love to see here as well is that on this chart in the bottom, the BBWP, Bollinger Band expansion, you can see that PayPal is just starting its volatility period. And what normally happens in those cases are the significant moves. What am I looking at particularly here? First of all, I'm looking at fundamentals. The price to earning ratio is sitting somewhat around 11, which is actually 30% lower than the competition and more than 30% lower than PayPal's own 2-year average of 16.3, which is significantly lower, guys, than S&P 500. And what's also interesting about S&P 500 that there are so-called periods of P&A expansion and P&A contraction, and we are currently in this price to earnings expansion period where the entire market is being revalued. So we can actually easily be at 30, and that would bring us to almost 3 times lower price to earnings vis-a-vis the S&P 500. On the other hand side, I really love the market structure here and how we were able to finally break above 200-day white line moving average. I think that would be starting to curl from here alongside 50-day moving average. And especially if you're able to accept in the upcoming range, I would not shy away from much higher targets. Speaking of targets, for PayPal, I would be looking first at somewhat around 75, the current high and the liquidity that is there. My second target, conservatively, will be around that small gap of February 2023 alongside $84, $85. I'm coming back to weekly right now, and those gaps are quite often covered in most of the cases. It cannot be seen on the weekly, but I'll show you in a second on a daily. We have a very huge gap here at around $140. Let me come back to daily so it's actually visible. Huge gap here between 140 and 155. That is actually the gap from February 2022. Disclosure, I have quite a huge PayPal position, 6 digit. I hope it would turn into 7 digits in a matter of the next few months. And how that would happen, well, of course, PayPal can just triple. That would be amazing. But I'm doing something more on top of that. So I'd like to share with you guys how I am playing the leap strategy with the call options or far expiration call options, in other words. So let's have a look here. You can see on option profit calculator, I am personally looking forward to accumulate more of 95 or $100 call options with the expiration in January 2026. And here you can actually see, for example, if you buy one contract currently at $8.30, you can buy it only for 100 shares minimum. So your total cost of this entire trade would be $830. So let's see here what should happen to PayPal for you to get exponential gains. So first of all, on green, you see those triple digit numbers are amount of percentage profit that you can generate if, for example, by 15th of March 2025, PayPal would be at around $105. It gives you 176% extra. So your profit will be $1,460 on top of $800 that you have spent. And the reason why I'm actually taking those 2026 calls, so it actually gives more room to play out. Of course, guys, be extremely careful because with call options, naked call options, you can also lose absolutely everything. So don't put the money there that you cannot afford to lose. Of course, my main position, my absolutely largest position is at stock themselves. But it's good to be exposed to these asymmetrical gains, in my opinion, via the option contracts. So of course, as you can see here, minus 100%, you can also lose absolutely all the money. For example, if either the price does not go up fast enough or it simply goes down, I kept the stable with $60. Of course, we can go into the recession, or we can start, for example, uninverting the yield curves at the end of this year, and that can also cause the whole market meltdown. We can have geopolitical risk and so on and so forth. So this is just an outcome that I still believe it's very interesting to consider. And yeah, you can see that either basically the price starts picking up relatively fast, or you have a little bit more time, but then price have to go more towards like a 3-digit range by 2026. So we still have 1.5 years for that trade to play out. One of the sectors that we covered on the previous video stream was cannabis stocks. Congrats to those who took them. The trades are significantly up. I am myself still in the trades. If you missed the Friday stream from last week, you remember, for example, the target for Tilray, I would expect in the lower double digits, around 10. So please don't get yet shaken out of your trades. are potentially here for the short squeeze or maybe even gamma squeeze. I partially would take the profits on Monday, Tuesday, Wednesday upcoming week, but I would like to rescale lower if given. So my trades are here on the screen for those who would like to follow. I'm still in, and I would let you guys know once I'm out of the trades. In my opinion, we are still looking very well, and that's the reason why I am not yet scaling out of my trades. We were just able to accept above 200-day moving average. I think the same picture. I like Sundial way more as a company for multiple fundamental reasons. But here you would see that we are starting to accept in the higher range, and similar example as Filecoin. I don't like to use the word overbought, oversold, because actually during this expansions and parabolic uptrends, things can stay in the very, very, very high RSI territory, especially those so-called penny stocks. Spoke to multiple market makers, and once that's to the benefit of the underlying institutions, they can keep RSI above 90 for days and months. So this is not, guys, how you should trade. Please, I know there are some people who trade the overbought, oversold, but this is not the environment for those across penny stocks. Yes, you can scalp on a 15-minute time frame, simply aiming for the mean reversions towards VWAP, volume weighted average profile, and this is exactly one of the hedge fund strategies. That's how they would trade, but it does not mean that on the longer term time frames we cannot go higher simply because our RSI is at 80s territory, right? So for us just to go and to retest the 50-day moving average, it's still another 220% from here. I think that's the same or very similar picture on Tilray. You remember my targets for Tilray. I said I would hold partially the positions all the way to 2 digits to $10. The situation here is actually quite similar. We are starting to accept into the previous range, and just to swipe the liquidity from the previous high of August, we can have another 70-80% move. So guys, as you can see, those trades are roughly around 75,000 in profit. Not that bad in 1 week. Hopefully next week we're going to be in 6 digits, and I will of course update you on my private Twitter. The link is down below. And guys, thank you so much for the feedback I received from you last Friday, and please let me know this week in a comment section down below what kind of things you would like me to cover. And with all that said, I wish you the happy, merry, long weekend, great holidays, spend some time with your family, touch the grass, and I see you soon. Bye bye.